This is Alan Bush with ADMIS. Starting out with the stock index futures, seeing prices a little bit better in the overnight trade, although some pressure developing more recently now. We did have the International Monetary Fund saying that the global economy is likely to only grow at 3.3% this year. This compares to their previous prediction of 3.5% growth. Today we do have the first day of corporate earnings season with Alcoa after the close announcing results. Keep in mind that the earnings outlook is deteriorating this quarter. The third quarter results are likely to show a 2% decline from the comparable period a year ago, and this would be the first quarter-to-quarter decline in the last 3 years. Also, we have the pre-announcements a bit distressing. These are the worst pre-announcement numbers since 2001, where corporations are pre-announcing outlooks that are negative by almost a 4-to-1 margin compared to outlooks that are going to be positive. So any surprises are likely to be bearish, I think, for stock index futures. Over in the currency markets, we're seeing some pressure in the euro currency. This with Merkel visiting Greece. Her visit met with protests, even though the Greek government had officially banned protests. There is a lot of activity there at the Greek parliament protesting her visit. We are hearing reports that the budget deficit in Spain is actually expanding in spite of the austerity measures that were newly imposed. So the euro currency under assault again. This trend is likely to continue. Also seeing the Canadian dollar and the Australian dollar in play. We continue to feel that the Canadian dollar will gain on the Australian dollar long term. In fact, this is a trend that is likely to last for several months, probably into next year. And in the credit markets, earlier we did have some strength in stock index futures, which seems to be dissipating now. Mostly higher commodity prices, that all putting some pressure on Treasury futures initially. But if we're right in our thinking that there may be some weakness here near term in stock index futures, there's a very good chance that we will see the credit markets trading from lower on the day to higher on the day. Any gains are likely to be led by the longer dated treasuries. Still thinking that the main trend is higher. Still thinking that there is a very good chance that we will be challenging contract highs in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Are you in for today? Not downsizing their sure. I think the U.S.